Off-market also rose almost 64%, 241 is buyers. You're definitely looking at your buy signal. The luxury market had a nice little rebound last week, 6 more contracts than the week before, 26 contracts signed. Welcome to this week's look at the state of the New York City real estate market, where I take a look at the luxury market, the Manhattan market, and the Brooklyn market. I do it because I want you to be informed. It never hurts when you're a consumer to be informed. Welcome to this week's look at the state of the New York City real estate market. This is for the week of October 2nd to October 8th. We are going to get started with the luxury market. There were 26 contracts signed last week. That is 6 more than the previous week. Remember, the luxury market are for the properties that are priced at $4 million and above. Of those properties, 9 of them were priced at $10 million and above. Those are our trophy properties. 17 of those were condos, 6 were co-ops, and 3 were townhouses. 16 of those properties were uptown, 10 were downtown. The number one contract signed last week was Penthouse 88B at 15 Hudson Yards. It was a sponsor unit. It was asking just under $25 million, and it was reduced from $32 million when the building started marketing back in October of 2016. Now that the building is finished and the unit is finished, this duplex condo is completed. It has 5,200 square feet. It includes 4 bedrooms, 5.5 bathrooms. It features 26-foot ceilings in the living room, dramatic south and west views of the Hudson River. It also has dramatic south and west views of the Hudson River. 15 Hudson Yards has 285 units on 88 floors. The amenities in the building include a concierge, a fitness center, a 75-foot pool, children's playroom, a ballroom, catering kitchen, and a residence lounge. The number 2 contract was apartment 70W at 217 West 57th Street. It too was a sponsor unit, was asking just under $20 million. It was reduced from $21,525,000 when this building started marketing back in 2018. This building has 13-foot, 6-inch ceilings. It has a little over 3,100 square feet, and it includes 3 bedrooms and 3.5 bathrooms. It features a corner living room that has beautiful sweeping views of Central Park. 70W is in Central Park Tower, which is a 1,550-foot tall skyscraper with 179 units, and it has over 50,000 square feet of amenities, including indoor and outdoor pools, a fitness center, a children's playroom, and a clubroom with a ballroom, dining facilities, and a cigar lounge. The stats for last week: total weekly asking price sales volume, $228,700,000. Average asking price, $8,796,154. Median asking price, $6,347,500. Average discount from original ask to last asking price, 13%. That's quite an increase. And average days on market, 804. Well, if you think about even just these 2 top contracts, they both have been on the market for quite a long time and both had quite a significant adjustment to the original ask to the last asking price. Okay, that's it for this week's look at the luxury market. We're going to move on now and take a look at what happened in the Manhattan market and the Brooklyn market. Then I'm going to wrap it up and give you my thoughts on what is happening overall in the market and best strategies for buyers and sellers on how to be most successful. So we start by looking at this 1-week look at the supply and the demand and the off-market properties for Manhattan. We'll see that the supply is still pretty week. 359 properties came on the market last week. That is down almost 12%. Contracts signed up, nice pop there, almost 29%. 180 contracts signed. Off market also rose almost 64%. 241. Is this another sign of seller fatigue? Very well could be. We step back and look at the 1 month look, we see a very nice jump in the supply, up 66% for the month in Manhattan. 1,831 properties came on the market. We really needed this supply to rise. We would expect to see it rise. It is still historically low, however, for what we're used to seeing. And if we look at the contract sign, we still see that that is down a little over 16%. 621 contracts were signed. The off-market properties, 734, up 33%. If we look at this market pulse, we see we're in a neutral market. And while we had been kind of trending downward for this market pulse, we're now starting to go back up because we are seeing an increase in contract activity. The liquidity pace chart, which shows us that 30-day moving window of contract activity, we see that beginning to rise, 621. We're still falling far short of where we need to be, but it's good to see the increase. The supply in Manhattan is ticking down. We are hoping for some increases, of course, but for now we are still falling short. The demand, so we see the 30-day liquidity pop in terms of demand by about 17%. It's in line with prior seasonal trends, excluding 2021. The new listings tick down, and it remains generally on par with prior years. Contracts signed, the signed deals popped by 47%. Buyers are finally back, and we are finally seeing this bounce back from a very tough September. And the question is now, we're in this very compressed fall market that goes historically, will go through October and into November a bit. So the question is, how long is this trend going to last? The Manhattan price cuts are important for us to be looking at because we see that the price cuts did pop back in September, but we knew September was very tough. Anybody who was trying to sell in September could tell you that. But even if you look at historically what happens in September, you can see that was to be expected. And so there was nothing really too noteworthy, although it did feel very, very tough. If we take a look at the weekly Manhattan price cuts, we'll see that this yellow line for 2023 did rise sharply in September to 2020 levels, but it does appear to be backing off. So it does suggest very strongly that the bottom may be in. I'll give you further thoughts on this when I wrap everything up. For now, we're going to move on to Brooklyn, though. So that's it for Manhattan. If you have any questions, of course, please post those below. If we take a look at the weekly supply for Brooklyn, we can see also low supply for the week, down a little over 13%, 163. Contracts signed up, nice little pop, a little over 17%, 109. And the off-market properties up 73%, 123. Again, some sellers are just really experiencing seller fatigue. They have decided to kind of sit this one out, very likely an indicator of that. If we look at the 1 month chart for Brooklyn, we'll see the supply overall 816, still quite low, up almost 24%. For the month. Contracts signed still quite weak, down. It's weaker than Manhattan, down 9%, little over 9%, 445. Off-market rose for the month, almost 44%, 346. Just those two charts alone are showing us that Brooklyn is, as a market, is performing differently than Manhattan in this fall kind of recovery. period. We are not seeing the same kind of buyer enthusiasm. Both markets are suffering from lack of inventory, but we're not seeing the buyers engaging. We're going to get into that a little bit more, but let's take a look at this market pulse chart for Brooklyn. We are also seeing a rise, of course. Again, has to do with market balance, supply and demand. We do see a rise. It looks like it's moving into sellers' market territory, but perhaps this just again has to do with the balance of supply and demand. When we look at the liquidity pace chart, 445 for the 30-day moving window of contract activity, we see that this too has moved up. So it's better than it was during the very difficult days of September. But we could see from that breakdown of the weekly look and the monthly look that we're not seeing a really strong movement on the part of the buyers to be rushing to put in offers and go into contract. We're going to look now at the supply chart for Brooklyn. We see that the supply ticks down in Brooklyn. It's kind of in line with the general seasonal trend. Usually we see a big pop of inventory in September, and then we kind of see a bit of a pullback in October. So kind of seeing that on track. If we see the demand, this 30-day liquidity does make a little 10% pop, which is nice to see. We will hopefully see a little more action this month. We still have the rest of October to go. And the new listings kind of appear to be doing their kind of usual seasonal slide downward. Hopefully we will see some additional new listings. We do need it. We do need them. That will help to encourage buyers to stay in the market and engage with the market. If we look at contracts signed, the deal volume popped 14% for the week, but it remains quite weak compared to previous years. Now, if we look at Brooklyn price cuts, the number of price cuts in Brooklyn remains steady from prior months, with only a slight rise in the price cut amount. And if we look at the weekly Brooklyn price cuts, if we focus on the green line of 2023, the weekly price cuts look to be more or less on trend, with no real signs of stress in this market. So that's it for Brooklyn. If you have any specific questions about Brooklyn, please post those below. But I'm going to give you my overall thoughts and my takeaways for buyers and sellers. The luxury market had a nice little rebound last week, 6 more contracts than the week before, 26 contracts signed at $4 million and above. 9 of those were at $10 million and above. Our trophy properties, as I've said previously, the luxury market is our bellwether for the rest of the market. When we see that is performing well, it portends well for the rest of the market, particularly when we're looking at this from a price action standpoint. If we look at the Manhattan and the Brooklyn markets, what we can say, if we're going to kind of sum these markets up, they are both in recovery from a very tough September. They are both overall in a low liquidity environment, and they are both bouncing off the bottom. Question is, this is a compressed market, this fall market. It's October and November, basically. So the question is, what is the recovery going to look like, this bounce back? And how long will it last? And, the other question is, will it go a little longer than it normally does? We'll have to kind of keep an eye on that part of it. That would be a little unusual if it did continue longer than November. But stranger things have happened, and we certainly have seen a lot of strange things in the last couple of years. The supply for both Manhattan and Brooklyn, the supply and the new listings is definitely, both of those are slowing down, both in Manhattan and in Brooklyn. The demand definitely up, which is great. We needed that, and we would expect to see it. We saw it definitely popped a little bit more in Manhattan than in Brooklyn. It's still light comparatively. Like, for example, We're kind of still in the middle of the month, but for example, in Manhattan, by the end of the month, we should be at about 900 contracts. We're not really on track for that, but it would be great if we would get there. If we look at the price cuts, this is where I was going with this. I think very important to note because buyers and sellers, it will help you to have productive conversations. In Manhattan, the monthly price cuts were last month 4.7%, and for Brooklyn, 3.85%. So we're nothing, these are not huge price cuts. And very likely now, with the increased contract activity, we're not going to be seeing very dramatic decreases to the prices. So something to be thinking about. Sellers, buyers are out there now. They are back. They are looking. They are starting to make decisions, and they are starting to make offers, and they are starting to make their deals. If you are not getting the activity that you want, you need to adjust your asking price, and you do not want to miss this compressed fall market. You basically have this month and some of next to get your deal done. Then it's going to get quiet if history tells us anything. If you aren't getting what you want, not getting the traffic, not getting the offers, adjust your price. What does that mean? Anything less than 5% as an adjustment is not meaningful. Somewhere between 5 and 10% is the way to go. Buyers, you're definitely looking at your buy signal. This is a low liquidity market. There are fewer buyers than typically are out there. You definitely want to be taking advantage of this market. From a price action standpoint, the market is likely bottomed, and we are in the beginning of the turnaround. You can see from the uptick in the contract activity that we've turned a corner. So if you are looking to buy in this market, I would not hesitate. I would get to it. And if you're really, really looking for negotiability, I've already shared with you the price cuts and the information that we have about where the data is coming in. So if you really, really want to have a lot of negotiability, you need to be looking at those properties that have been on the market for a while, at least 120 days. And yeah, I would even think about those properties that sellers have taken off the market. Perhaps they might still be interested in selling, so you could approach them. All right, that is it for this week's look at the state of the New York City real estate market. As always, if you have any questions at all, please post those below, or you can always reach out to me at Sotheby's. As always, my thanks to Urban Digs and the Olshan Luxury Report. The work that they do helps me to help you to make great decisions. I'll be back next week with the very latest news on what's happening in the New York City real estate market. In the meantime, take care.